Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of October 30th through November 3rd, where we'll try to see if we're going to get a trick or treat from the Fed. We'll talk about trading strategies to hopefully help you make money trading, succeed regardless of whether we get a trick or treat from the Fed this week. So let's get started. Welcome, Easy Mike. Thank you for joining us. Glad to see you in the live chat today. So here's our Google document with our notes for our weekly trading game plan for this week. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this notes Google document in the description box below. Our notes contain links to bonus videos, the tools and resources we use for our market analysis, our strategies, our trade ideas, etc. We keep all of our Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes from this week as well as previous weeks, and you can also find a direct link to that publicly accessible Google Drive folder in the description box below. Good morning, John, the Ricky Khan. Thank you for joining us in the chat today. Hope you all are doing well. So first we'll look at how the markets ended up on Friday from last week. So we'll jump over to the main page of FinViz. We see the Dow declined 1%, pretty much declined and then stabilized towards the end of the day. The NASDAQ eked out a slightly positive 0.4% positive for the day. And the S&P dropped about 0.5% and then stabilized towards the end of the day. We had about 70% decliners, 30% advancers, only 3% new highs, 96% new lows, 16% above their 50-day moving average, 84% below, and 20 above their 200-day moving average and 80% below. So pretty bearish. We've got a lot of weakness under the covers. The week was generally down. We see Friday, the Magnificent Seven, made a little bit of a comeback. Thursday, those were down, so it was a rebound in the Magnificent Seven. Pretty much everything else was in the red. See Amazon and Meta were the outperformers. Again, Microsoft has been holding up pretty well. Got some big earnings coming up. We'll talk about that as well. Also, we had the UAW settlement with Ford, but they made a short pop and then declined. We'll talk about that probably more tomorrow. We see some of the news. U.S. halts export of civilian firearms. S&P joins NASDAQ in correction. So now we have the NASDAQ and the S&P are currently in a 10% or more correction. The worst October for stocks in 5 years has investors exiting markets. So that's an important thing to note is people are fleeing stocks and going to bonds, treasuries, CDs, etc. So again, liquidity leaving the market, and that will have, a negative impact. Dow drops more than 350 points, closes in correction. So oil broke above 85 again. It had declined below 85, but it did recapture that 85. So it's kind of stabilizing at that 85 level right now. We saw natural gas run up to about 360 and then decline towards the end of Friday. Gold finally broke above 2,000. So now it's trending upward from that 2,000 level. Again, we'll see that in the futures, and we've talked about that, waiting for that breakout in gold above 2,000 for some time. See both the Dow and S&P are showing negative, more negative on the Dow, NASDAQ slightly positive. Welcome, Douglas PC, Walter Lyons. Thank you for joining us. Glad to see you in the chat again today. DXY has been holding around 106, a little bit above 106. We see some weakness in the euro. The yen's been weak. It's been testing that 150 level. The treasuries had surged up towards 5% earlier in the week, again putting downward pressure on the stocks. Did decline a little bit. 10-year ended up break even on Friday, although it was down a little bit. and you can see it's now down below that 5% level, and we've got that de-inversion of the curve. So the curve continues to flatten, continues to de-invert. There's a lot of talk, about the pressure, upward pressure on the treasuries, putting downward pressure on stocks, and an expectation that, the 10 years will go back up over 5%. Now there's even talk of treasury yields. Some people are saying they're going to go to 6%. So we'll look at each of the indices a second. Welcome, Ellen Krantz. Thank you for joining us. Hope you're doing well. So we see the SPY broke down below that descending trend line. Again, a lot of weakness. It's got, could go back and test the May lows, could go back and, even test the March lows. So not a lot of support right now. It's broken down below its longer term trend line. Look at the weekly. Again, it's broken down below its trend line. It's got, quite a bit of room to decline, towards that even longer term, the 200-day trend line. So it's down below the 50-week, and it's got some room to fall to the 200. In general, and we'll see this in the futures as well, I wouldn't be surprised if we got a little bit of a correction back to the upside just because of this steep decline. Maybe early in the week, an attempted to rally, but then again, the trend is significantly down. NASDAQ, the Qs, again, got rejected from the shorter term trend line, declining. It's got quite a bit of room to fall to the 50-week. So a lot of, broke down below that previous low. And again, it's got a lot of downside, although the NASDAQ seems to be, holding up a little bit. Again, probably attributable to the Magnificent Seven. And we saw this rotation in and out of the Magnificent Seven during the week. And I would expect that to continue as well. The Dow, again, pretty weak, got rejected off that 50-week moving average, downtrending, possibly break down to this previous low, and possibly get some support from the 200-week moving average. So again, a lot of weakness in the indices. Look at the IWM. Again, I wouldn't be surprised to see a very short-term rally correction, but then again, the trend is very much to the bearish side, to the downtrend. So IWM very weak, just downtrending, broke below the previous low, making new 52-week lows. So again, a lot of weakness, higher risk, small cap stocks. There's really no sign of much support in the IWM at this point. Welcome, Just Joe. Thank you for joining us. Glad to see you here in the chat today. Hope you're doing well. Yes, and I agree, and that's what I was been saying is I would not be surprised to see a small bounce and then further downside. So be prepared for that. Opportunities to make money trading that. The VIX, we saw it's now broken above 20. Seems to be holding that 20 level, oscillating a little bit around the 20. I think at one point it tested 22. We'll see that in the futures. But again, noticeable uptrend in volatility. Now, again, with the Fed meeting this week, I would expect, people kind of holding off, making a decision, waiting for the Fed decision on Wednesday. So we might see a lighter volume, fewer buyers. Whether that increases volatility or not, we'll see. So we'll look at the groups, the sectors, the industries, see the sector rotation. So on Friday, we saw, again, some rotation into technology, consumer cyclical. Again, this was a rotation that we'll see, the technology was pretty weak, consumer cyclical somewhat weak. The worst performers for Friday were utilities and healthcare. And again, we were seeing that rotation in and out of utilities. It's a little odd given that the treasury rates are, 5% plus. Utilities generally don't pay that great of a dividend, but it's a typical flight to safety rotation. So we're seeing that rotation in and out of utilities. So we see for the week, utilities was the only green sector. Basic materials pretty close to break even. Communication services, we've seen this rotation out of energy. Oil declined, down from that 90 level down to below 85. Real estate's been rotating. We're seeing some money flow into real estate, but again, on Friday it was pretty weak. And again, for the month, everything's in the red. Utilities, holding up the best. Again, that's a flight to safety. Utilities and technology, so kind of two ends of the spectrum. Again, a lot of the technology, I think, is the Magnificent Seven holding up the technology sector. Now, for the quarter, energy was the best performer, and real estate and utilities were the worst performers. So again, we're kind of seeing this very slow rotation. We're seeing some attempts to rally in real estate and then a rotation back out, particularly when the 10-year yield surges up to 5, then that hits real estate due to mortgage rates, etc. Welcome, Flip of the Shippa. Thank you for joining us. Hope you're doing well. So look at the industries. See gold and silver made a nice bounce. Gold again up over 2,000 now. We see internet retail is probably Amazon. Some materials, basic materials, were positive on Friday. See the REITs got hit on Friday. We had seen a slight bounce on Thursday, and then they got hit on Friday. So REITs were pretty negative. Uranium, I've been watching it. Again, we looked at this before, and it looked like the uranium stocks kind of hit their resistance level and have been downtrending, but they're still relatively high. So solar, there's been terrible. They attempt to rally it occasionally, but definitely a very poor sector in general. So the weak miners, steel, coal, some energy. Again, REITs in general for the week were down. Again, solar very negative. So for the month, gold and silver outperforming. We see in the futures that nice bounce. That seems to hopefully will continue. Again, partially a flight to safety as well. Gold and silver, again, with the global turmoil, etc. That's a typical flight to safety. Aluminum, very negative. Solar, again, very negative. And airports and some of the REITs were pretty negative. So again, we're seeing this flight to safety on and off, rotation in and out of the Magnificent Seven, and I would expect that to continue. And again, you can use this groups tab in Finviz to watch this during the day, see the rotation, see how it's changing. So I hope that all helps. Okay, I'll bring up the economic data chart in investing.com. Then I'll go over some of my highlights for the week. Let me grab a quick drink and we'll go over the economic data from last week, and then we'll talk about the upcoming economic data for this week. Just a quick reminder, as the important economic data comes out, I try to post it in a Surf the Markets channel in our Discord. Our Discord is free to join. So we'd encourage you to join our Discord. You can find an invite to our free Discord in the description box below. And again, as this important economic data comes out, I try to post it in the Surf the Markets channel in our Discord as quickly as possible. I'll take a screenshot out of investing.com and also post the raw data again as quickly as I can, as well as some pertinent news items as I see those get posted. So again, good way to keep up with the breaking economic data is join our Discord, watch the Surf the Market Reports channel. So we hope that all helps. So I didn't have a lot of notes Monday through Wednesday. Thursday, we got jobless data and core PCE data. You see the core PCE data for Q3 was just a little bit below expectations, still relatively hot. We also got GDP data for quarter three, which was, hotter than expected. So again, the economy's doing fine. The Fed doesn't really have to worry about a recession. We have no indications of a recession through Q3, which means, we're not going to even possibly have a technical recession until, Q2 of next year. Continuing jobless claims was a little higher than expectations. So again, we're seeing, the people that are looking for jobs, it's taking a little longer. Initial was just slightly above expectations, a very small uptrend, but not dramatic. So, again, we're not seeing a severe weakness in the job market. So again, Fed doesn't have to worry too much about unemployment. We see PCE prices is high. Consumer spending was much higher than previous, so the consumer's still spending, which is that, and the PCE prices are inflationary, so those might be reasons for the Fed to go ahead and hike during this upcoming meeting. Again, of course, PCE prices were pretty much in line. The price index was a little bit higher than expected. Personal income a little lower than expected, but again, spending was higher than expected. So again, consumers still spending, and again, potentially inflationary. See, we also got Michigan consumer sentiment data. Their one-year inflation expectations up in the 4s. So again, that's negative from the standpoint of the Fed. They don't want the perception of higher inflation to continue. The long term stayed at 3. Consumer expectations more negative than expected. Sentiment about even, and current conditions bumped up a little bit, but was lower than the previous. So again, from the consumer standpoint, they're still concerned about near-term inflation. So again, potential reasons the Fed might hike, and again, the Fed might use those data points as a basis for going ahead and hiking this week. So we'll look at the economic data, the rest of the economic data from the past week, and then we'll look at what's coming up. So we had some Fed auctions, a little weak, not terrible. Get manufacturing about 50, which is kind of flat. Crude oil stocks dropped quite a bit more than expected, but again, that didn't really boost the oil prices much. So I think it's more the concern in the Middle East than the inventories at this point. Mortgage rates, I think I heard it touched 8 at some point, now back down to 7.9. Building permits, a little below expectations, but pretty much in line. But existing or new home sales was very positive, so beat expectations. So again, they're continuing. The new home builders are doing well, but existing home sales very poor. Again, crude oil inventories went up more than expected. So we talked about jobless claims data, GDP data, consumer. Talked about core PCE data and Michigan consumer sentiment. Baker Hughes oil rig count again bumped up just slightly. So again, we're seeing that upward trend in the rig count numbers as we kind of expected, as oil prices are high, but not a dramatic increase. So it's not going to put too much supply pressure, downward pressure on oil prices. So the oil producers are doing well. We'll look at the economic data for next week. So we got, again, some auctions, some treasury bill auctions on Monday, Tuesday. And again, those are more important than they have been in the past. If we see a weak auction, that's going to boost yields up, put downward pressure on, the TLT, on stocks, etc. Chicago PMI. So then Wednesday, we get the main event will be the Fed interest rate decision, which will come at 2:00. They'll release their statement and they'll make announce their interest rate. You can see the expectation. We're going to look more into the probabilities using the Fed Watch tool, etc. But the expectation is that they're going to hold. They're not going to raise. That's what people are saying. Then at 2:30, Powell will come out and give his press conference, in my humble opinion. I think that's what's going to be more important, unless they give us a trick and they raise, as we'll see. The market's not expecting a hike, as you can see there. And that would be a real trick, and I think the market will react very negatively if they do raise. Even if they don't raise, though, I think people are going to be listening very carefully to what Powell says. The expectation, how is he interpreting this data? We're seeing the data is pretty inflationary. You got a strong consumer spending, GDP's fine, employment market's okay, so they could raise. And they had been, telegraphing that most of the Fed officials believe they should do, at least one more hike. It's just a matter of when. So we'll, again, look at that in more detail using the Fed Watch tools that we have available and the probabilities of raises in the next couple months. Also get mortgage data on Wednesday, some construction, some ISM, JOLTS. This is coming out, they will have already made their decision, but we'll have to listen to hear how many job openings to job seekers the ratio is. Powell's paying close attention to that ratio to give them an indication of the balance of the job market. Thursday, we'll get job cuts, continuing job claims. Again, I think that will be less important after the Fed interest rate decision, but we get typical natural gas and oil inventory data. Then we'll get jobs data. Again, on Friday, payroll data, U6 unemployment. So again, important for the November meeting, but again, I think the repercussions of the Fed decision this week will outweigh what people are looking for in November, unless that really is very different from expectations. So also, we're right in the midst of earnings. So you can look at the earnings calendar also here in investing.com. This will be the complete earnings calendar. So you can search for, anybody you're particularly interested in. We see, McDonald's, so that'll give us some consumer information, restaurants, etc. Arista, there's some technology infrastructure, semiconductors. We've got, some pretty significant earnings throughout the week, some banks. I believe at some point this week, I could be wrong, but I think NVIDIA and Apple are both reporting. So let's see, again, you can search for these. If anybody in the chat happens to remember when NVIDIA and Apple are reporting, again, the list is pretty long. So the Ricky Khan says Apple on Thursday, AMD. So again, important earnings to watch out for. Again, the expectation is that, Apple's business, particularly in China, is slowing. That's why I just had today. So I had to go to next week. So now if I go Apple. So I saw Pinterest. again, tons of earnings. I'll let you, search for the ones that are of particular interest to you. And in a second, I'll show you, where we can find a shorter list for just the upcoming next couple days in Webull as well. There's SoFi. So again, tons of earnings. It's important to know, who's got earnings coming up, and how to make money trading when earnings matter, and earnings definitely matter. Also, guidance is very important. We saw, with Google and Amazon, etc. Not only is their top line numbers important, but also the what comprises those numbers. So Google had a slow in their cloud business. Amazon's cloud business is slowing a little bit. Microsoft doing very well, and so that definitely hit Google particularly. So again, it's important to listen to not only the top line numbers that they're going to beat, but also, what's their guidance going forward, and, where is their business slowing. Okay, so we'll jump over to Webull, look at the market screen as well. Grab a quick drink. Just a quick reminder, if you're not already using Webull, we use Webull for our market analysis, our trading, our due diligence, and you can get up to 12 free stocks by joining Webull and funding your account. You can also get 5% interest on uninvested cash in your cash account. So again, if you're not already using Webull, it's our preferred trading platform. And if you join with our affiliate link in the description box below, you'll get your, up to 12 free stocks, and also help support our BeachBum trading community, which we greatly appreciate. Welcome to Crow. Glad to see you. Thank you for joining us. Hope you're doing well. So I'm using the online browser version of Webull. I'm on the market screen. I like to use this for our market analysis. You can see the histogram of decliners and advancers from Friday. So it's 1,800 advancers, 4,000 decliners, so more than a 2-to-1 ratio. Decliners, it looks like a declining curve. So the majority were small declines, but a significant amount of significant declines. Advancers very small. Some outperformed. The cash inflow, as we've seen the past couple weeks, NASDAQ had an outflow, and it was actually negative. So there was actually cash coming out of the NASDAQ, and that increasing towards the end of the day with just a little bump up at the very end of the day, but a net inflow into the NYSE, particularly very early, and then pretty flat through the rest of the day. So we've seen a continual outflow out of the NASDAQ, particularly more inflow in the NYSE than the NASDAQ. So even though technology's been holding up, etc., again, the overall index has been showing outflows. Again, in the calendar tab in the market screen, you can see the immediate upcoming earnings. So again, if you're looking for who's going to report very soon, we can see, here's PetMed, etc. You can see if it's after market close or before market open. So again, lengthy list, so you can go forward, This is all just for the 30th. There's Lowe's, so Lowe's and Home Depot will trade in sympathy. Vornado is one of the major REITs. I think that's an office REIT, so that'll have an impact on REITs. So we'll look at the best performing industries for the week. Welcome, Doug M. Thank you for joining us. Hope you're doing well. So the best performing industries for the week. So we see some aerospace positive, a little bit of retail, a little bit of packaging. Again, uranium. So, there's been some sector rotation in and out of uranium, but generally they've kind of peaked out and trending down recently. Real estate pretty negative. Utilities, pretty even. Aerospace pretty even. And some positive utilities, some positive retail, metals and mining a little positive. Look at the ETFs. We'll look at the ETF trending in the indices. So short, mid cap, small cap bear. So as we saw, the IWM's very weak. So mid cap and small caps down, Russell down, short the Dow, short mid caps. So again, Dow down, short S&P, short mid caps, small caps. Up on the VIX, so UVXY up almost 5% on Friday. So again, we saw the uptrend in the VIX. So we've got VIXY, VXX, UVXY, and then this SPKY is a VIX spike. Again, small cap bear, so down on the Russell. So again, a lot of downward pressure. So short on Europe and up on China. So short Europe, up on China. Again, China's been pretty volatile, and we'll look at some additional ETFs so you can trade the volatility in China. I know some people participate in that in short-term trading. So this is showing up. TQQQ is long, leveraged long on the NASDAQ. So again, the only index showing a positive trend right now is the NASDAQ. Okay, industries, shipping, lithium miners, copper miners, some communication services, some basic materials, technology pretty split. Again, the FANGs, so that's, the Magnificent 7 Plus. Semiconductors positive. Basic material, lithium been pretty beaten down. Copper's bouncing. We'll see that in the futures as well. Consumer cyclical. Real estate pretty negative again from Friday. Energy generally negative from Friday. See, John's asking about a specific OPP. I'm going to put that in the questions, and I will come back to that, and we'll look at that in the dividend payers tomorrow. That's one I'm a little familiar with. I've looked at it. And again, I'll come back to that tomorrow and try to address OPP, your question on OPP tomorrow, if that's okay. And if anybody else has, individual stocks, questions on individual stocks, we'll look at individual stocks tomorrow in our part 2 of our weekly trading game plan. And you can always put them in the comments to this video. Also, you can put them in our Discord, etc. contact us via social media, and I'll show you those links where you can find us on social media in a little bit. So we'll get back to commodities. So shipping, oil, gas, oil, and shipping, gold. Gold, so bonds, we've got some gold, the yen, so FX wise, a positive yen. So if somebody's thinking the yen's bottomed, we'll see that in the futures as well. So you got several people thinking the yen's bottomed, Australia bottomed, euro bottomed, negative British pound and Swiss. And again, we'll see that in the futures in a second. Okay, so we'll jump over to the futures. And we see these downtrends in all the indices. They broken below their previous recent lows. Significant downtrend. No indication here of a short-term support. Got a little bit of that bounce, but that's kind of like a morning star on the NASDAQ. But again, we saw, in the ETFs, etc., the positive trend in the NASDAQ. So it may hold that level. Again, we might get a little bit of a bounce, a relief rally, but then the trend's definitely down. Again, Russell just steadily downtrending. See a couple little pops, attempts to rally, and then downtrends further. All Nikkei might have found some support at that capitulation level, but that's big morning star. Euro stocks weak, broke down. DAX broke down. See that uptrend in the VIX. See at one point it tested 22, got rejected, but now it's broken above the body of that previous high. So again, VIX uptrending, increasing volatility. Again, we see oil tested 90, broke down below 85, and now it's recently regained 85. Looks like it's testing that 85 level. So we'll have to see if it holds and breaks back up to 90, or if it rejects and breaks back down to 80. Natural gas future contracts look like they rolled over, jumped up to the above threes. It's now broken above the previous high, so definitely an uptrend, continuing uptrend in natural gas, but again, a lot of volatility. We'll talk about the ETFs. You can short-term trades, short-term swing trade, natural gas, oil, gold. We see that very nice bounce and uptrend, and gold finally broke that 2,000 level, and now it's got some room to run. Broke the previous high, so again gold strong uptrend. Again, we'll look at some ETFs to long and short gold. I think the Crow mentioned one of the shorts, GDXD. We use GDXU. It's a leveraged long on gold. Silver, both gold had this bullpen or bull flag. Both of these had formed a very nice bull flag, which is a bullish pattern. And again, we still see silver just made this little pop out of that bull flag. So again, we might see this uptrend and trend back in silver back up to 24. It finally looks like it's about holding that 23. So I think there's an opportunity here. The short-term long for ETF for silver is AGQ we like. So again, we'll see that in our ETF spreadsheet as well. So again, that the gold one, it broke out of that bull flag very nicely, and then surged above 2,000. So platinum bounced back up. Palladium not so much. We saw this steep decline in cattle. I was looking at that DBA ETF, but the risk reward wasn't all that attractive. So then we saw a bounce. Corn started downtrending again. Wheat, again, it's been kind of in a bottoming pattern, a consolidation pattern, had a slight break up. Now it's, looks like it's downtrending again, a bottoming type pattern. So we're waiting for, more of a pronounced swing back up in wheat. We'll talk about that tomorrow as well. Again, bonds, generally under pressure, although generally this week, they oscillated up and down. So, in my humble opinion, it looks like the TLT, it looks like the bonds, the longer term bonds, are trying to form a bottom. Again, there's discussions that bond yields, will go up to 6%, which obviously would decrease the price even further. But it does look like they're trying to form a bottom, consolidate along a bottom. So we might get some period of stability in the bond yields, bond prices. And that may give us some opportunities if it does, break down further. The Treasury's still issuing. So, but again, we saw how long it took the bonds to reach 5% yield. I've been saying they needed to go to 5 for a very long time, and we saw how long it took them to go, up to 5. I expect it will probably consolidate in the low 5% yields for some period of time. If we do get that 25 basis point hike from the Fed, obviously that would put upward pressure on yields, downward pressure on bond prices. And again, everybody's watching the bond prices now, as well as the dollar, putting pressure on stocks. So again, the dollar's been pretty stable around 106. We see some oscillations, around 106, but it's, broken out of that, uptrend. Now it looks like it's more stable, consolidating, oscillating around 106. So the other foreign currencies, the yen, really broke down. There's talk of some intervention in the yen that might cause a pop-up if they do intervene. Otherwise, the euro has been bouncing around 105, 106. So I hope that all helps. Okay, let me grab a quick drink and let me go to our strategies, and let's talk about whether we're going to get a trick or treat from the Fed. And then we can go back to ETFs. Okay, so the big news for this week's whether we're going to get a trick or treat from the Fed. As we saw, the Fed meeting is Wednesday. We'll get their statement at 2, along with their interest rate decision. And then Powell will come out at 2:30. And again, I think the important factors will be what Powell actually says, and I think everyone will dissect his statements to see, do they think that the recent increases in the bond prices has been a proxy, a substitute for their rate hike? Do they think they still need to hike rates? I'm sure they're going to say inflation's still high. I'm sure they're going to say, the job market, the consumer's resilient, the economy's resilient, but inflation's still too high. So they have good basis for raising rates. So now let's look at what does the market think in terms of whether the Fed's going to hike in the next couple meetings. So we'll use the Fed rate monitoring tool and also the CME Fed Watch tool. We have a couple videos on our BeachBum Trading YouTube channel that you can find that explain in more detail about how to use these tools to determine the probabilities of Fed interest rate hikes. And you can find links to those tools anytime under the reference links in the links section on our homepage. Our homepage is beachbumtrading.com. So as I mentioned, you can find links to all our social media sites, an invite to our Discord, our Reddit community, our Facebook group, etc. and all our social media profiles, so you can contact us to ask us any questions. And then again, under the reference links section, you can find links to the CME and also the Fed rate monitoring tool. So again, you can look at these as the economic data comes out. These probabilities, oscillate as the market digests the economic data and then adjusts the probability. So here's the Fed rate monitoring tool. Let's see, we're going to get the decision November 1st at 2, so it's got a countdown clock. And you can see for November, the probability is, almost 100%, 98% that they're going to do nothing. They're going to hold where they are. So the market thinks they're going to hold, and I think that will be interpreted as a treat. If they do hike on this meeting, I think the market will react very negatively because the expectation is very strongly that they're going to do nothing. So again, the trick would be if they hike, the treat would be if they hold, and I think we'll get a rally, maybe a short-term, short-lived rally, but if they do hold as expected, I think we'll get a short-term rally, Wednesday through the end of the week if they hold. Now for the December meeting, the next meeting is December 13th. Again, the probability is, almost 80% they're going to hold, 20% they're going to hike. So again, the market is, currently believing that they're not going to hike this year. Then we see January, there's about a 60-30, so 70% hold. So it's about 70-30, 30%, a 25 basis point hike, and a very small percentage of a cut versus a 50 basis point hold or hike. So again, the market believes the Fed's going to hold at least through the beginning of next year. If they do hike in the next two meetings, again, I think the market's going to react very negatively to either of those. I think the Fed has a basis, given the high inflation, to hike another at least 25 basis points, as they had previously indicated. But again, they may explain that the surge in bond yields is essentially a proxy for an interest rate hike, has tightened financial conditions, and therefore they don't need to raise the interest rates at this time. I'm sure they're going to say they're going to continue to be data dependent and do what they need to do to get inflation down to their 2% target. Again, that's my opinion. Again, none of this is financial advice. We're not financial advisors. But again, that's kind of what I expect to hear, and I expect them to do. I think, again, with the surge in bond yields and the decline in the markets, etc., and some of the other global instability, I think they will hold in this meeting. I don't think they'll hike in November, and then they'll say they're going to be data dependent and see what happens in December. So we'll also look at the CME Fed Watch tool, another tool to look at the probabilities of a hike. And I agree with Ricky Kahn, as I mentioned. I think it's very important to listen to what Powell says as to, do they need to do further action in the future. Again, I believe they're going to say they're going to be data dependent. They're going to say inflation is still too high. They're going to stick to their 2% target, etc. So they're going to say the job market's resilient and the economy is resilient. So again, they have a good basis for raising rates a little bit more. But again, they might say the surge in bond yields and weakness in the bond market is essentially a proxy for a rate hike. So again, my opinion. So again, here's the CME Fed Watch tool, very similar. Again, we have a video on how to use this tool in more detail. A lot of information you can see in this tool. But we can see the probability they have for November hold is 99%. Virtually no chance that the Fed's going to hike in November. Let me zoom this out a little bit. There we go. So we can look at December as well. So again, 80-20, 80% hold, 20%, 25 basis point hike. So again, we'll see how that shifts after Powell's comments. If he says they still need to do more, the probability of a December hike might increase. And then January, again, about a 70-30, 71% hold, 26% hike. So again, all indications via the tools that we have available currently say the Fed's going to hold interest rates at 5.5 through the end of this year and to early next year. So again, the market believes the Fed's going to hold. Any indication that they might hike again this year, I think, would be a trick on the market. And I think we'll get a very negative reaction if there's any indication that they're going to hike either this month or next month. Very quickly, some other strategies that you can listen to, take advantage of to make money trading through November and the rest of this year. Got a couple bonus videos, probably release those this week, couple short videos on how the markets perform in November, best performing sectors and industries in November, and then also how to make money trading in the fall. So you can listen to those videos now via the links in our notes. So now I'll quickly jump back to our ETFs. Again, we can look at some of the ETFs that have been mentioned, and then if anyone in the chat wants to look at some others, if you throw those up in the chat, we can look at those. I want to look at the technology screeners just very quickly. Again, you can access this ETF Google Sheet at any time if you join our Patreon at the All Access or VIP level. And again, we use this once we identify an opportunity in an index, a sector, a commodity, etc., and we want to know how to trade that long or short. You can jump over to our ETF Google Sheet and find individual ETFs to trade those. This technology screener, again, you can see it's in the screeners tab of our ETF Google Sheet, along with some other screeners that you can utilize to hopefully help you make money trading. And I think this is interesting. You see all the technologies pretty much have broken down below their trend line. FANG is getting a little bit support from its longer-term moving average. So again, a little more resilient in the FANGs. Again, you can trade the FANGs long with FANG-U, short with FANG-D. Biotech's just in a steep downtrend. Semiconductors broke down below that declining trend line. Looks like that's getting resistance, but it's chopping around there. And again, the NASDAQ as a whole is broken down below that trend line, below its moving average. So again, potential weakness, but the Magnificent Seven, trying to hold things up. So I thought that was interesting. Okay, we talked about, since I don't have a lot of time left, we talked about gold. So GDXU is the long on gold. Crow mentioned a GDXD as a short on gold. There's another one on gold miners. I know Money Mitch has been talking about Dust. Dust is a bearish leveraged ETF down on miners. There's also a double short ETN DZZ. Again, we talked about silver, like silver, long AGQ, short ZSL. So again, and I think I probably should have said this earlier, but I think in the near term, short-term trading, scalping, day trading, looking at the trends and playing with some of these leveraged ETFs, I think there's plenty of opportunity to make money trading, even in this, downtrending market. Using these, leveraged ETFs, you identify the near-term trend. We talked about China. I know several of our BeachBum traders Use yin and yang, again, daily. You can trade the volatility in China using yin and yang and make some good money. Talked about oil and natural gas. So oil, our preferred shorter term trades, strip, short, gush, long. You can also trade UCO long, SCO short, natural gas, long, boil, short, cold, KOLD. Last week we looked at potash. Easy Mike was looking at potash. You can see some individual stocks. We don't have ETFs to trade potash directly, but there's a couple individual stocks we have there, and you can again see the risk reward profile using our ETF spreadsheet. We talked about that sector rotation into real estate. We'll look at real estate again tomorrow. We'll talk about retail. Talked about utilities. Talked about the decline in the Russell. We'll talk about that again tomorrow. Talked about treasuries. So again, you can see the bottom in treasuries was about, and TLT was about 82. It's bounced up a little bit from that. It's kind of, stabilizing. You can trade the volatility in treasuries, TMF long, TBT or TMV short, and you can see the risk reward profiles of those. And we talked about utilities. I have a utility long with UTSL, utility short with SDP. We also have some, we were talking about the yen. So you can see if you want to trade the yen long or short. And again, we talked about wheat, and we'll talk about wheat, that longer term swing in wheat. Also tomorrow, volatility. Again, great opportunities for very short-term trades and volatility using UVXY, SVXY, long UVXY, short SVXY. And again, I expect, there could be significant volatility on Wednesday around the Powell speech. So again, plenty of opportunities to make money short-term trading using these various leveraged ETFs. Yep, TZA is a small cap short, as the crow is pointing out. And TNA is the small cap long. And we've talked about kind of a seasonal sector rotation that we're waiting to skate to where the market is going. That was our theme from last week. Again, these are longer term things, longer term trends that we're watching for. So here's the small cap short, TZA, long, TNA. Okay, semiconductors, SOXL long, SOXS short. We talked about the FANG D and FANG U. So those are the FANG stocks. I guess somebody's coming out with an ETF on the Magnificent Seven. It would be a new one, and I tend to prefer something with some history. But most of the components of the Magnificent Seven can be found in the FANG U and FANG D stocks. So long FANG U, short FANG D. You can see again the risk reward profiles of those in our ETF Google sheet. Yeah, I don't know. Easy Mike is asking about the ETF. I just heard that somebody was coming out with a Magnificent Seven. I don't know what the ticker is going to be yet. So, okay. So again, if anybody has any further questions or you want us to take a look at individual stocks or some further ETFs tomorrow, you can put it in the comments to this video. Again, you can always contact us in our Discord. You can tag us, BeachBum Trading, all lowercase, no numbers or other characters. Looks like I've got some other imposters to get rid of after this. So this is us, BeachBum Trading, all lowercase, no numbers or other characters. Again, you can also contact us via any of our social media sites, and you can find links to our social media sites in the links section of our homepage, beachbumtrading.com. So again, I appreciate everyone joining us today in the live chat, and let us know, how can we help you succeed in your trading career, make money trading? How can we improve these weekly trading game plan or any of our other videos, our communities, our content, our systems, tools, our Google Sheets, etc. Let us know what we can do to help you make money trading, help you succeed in your trading career. And we hope we'll see you all again tomorrow at 10 a.m. Eastern Time for part 2 of our weekly trading game plan for the trading week of October 30th through November 3rd, where we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, our shopping list. Again, we'll talk about dividend payers, some of our option strategies. And again, if there's an individual stock you'd like us to review, let us know. We can hopefully take a look at that in part 2 tomorrow. So again, thank you to everyone that joined us today and who's watching this video, and have a great rest of your day.